Are there two big factors going on right now that will support and maybe, just maybe, even propel the price of precious metals as we move into the coming months, quarter, year end? We've got people like Buddy Rumble, the Louisiana gold guru, making bold predictions about $30 silver. Where could we see the gold price as well? There is so much going on in the world right now. We're going to talk about the war, or should I say wars, going on right now, right in front of our very eyes. But we can't ignore that just domestically in the United States, yes, the world's biggest, strongest economy, we've got more and more signs of major trouble. We're going to talk about that as well, because what does that mean for the future of what the Federal Reserve does with monetary policy? It's becoming very clear that we've got trouble right here in River City, right here in the United States. And we're going to talk about some stunning headlines that came out over the weekend that definitively show just how much the middle class, the average American, is suffering, and how the economy could be barreling towards a recession or possibly even worse, a depression. But let's get started here first. The stock market was sinking this morning. The gold price up, 0.5%, 1%. Gold is catching a bid as a safe haven asset. When geopolitical turmoil, war explodes around the world, gold and silver are known as safe haven assets. And isn't it nice? It's not nice what's going on with the conflict and the horrible situations that are unfolding, but the gold is proving itself once again by getting this bid as a safe haven asset. It says here, stocks sank this morning ahead of the bell as the Middle East conflict added a dose of geopolitical risk to the interest rate and inflation concerns already facing the United States. There's two big things going on right now when we're looking at the world through the lens of silver, gold, and platinum. We've got what's going on in the world economy, in particular the United States economy, but we also have what's going on in the world from a war perspective. And guys, this is a huge, huge deal. Let me read this to you. To me, this was eye-opening that the New York Times, of all papers, said this. They said, Russia has started the largest war in Europe since World War II. Think about that. The largest war in Europe since World War II, almost the last 100 years. China has become more bellicose towards Taiwan, right? We forget about that, right? There's the big China-Taiwan situation. India has embraced a virulent nationalism. Israel has formed the most extreme government in its history. This is from the New York Times. And on Saturday morning, Hamas brazenly attacked Israel, launching thousands of missiles and publicly kidnapping and killing civilians. This is the world we're living in. Now, we're talking about the worldwide geopolitical backdrop, the safe haven component to silver, gold, and platinum. That's what we're talking about now. But don't forget, we got even almost equally as bad news when we look at what's going on in the United States. And we're going to talk about that a little bit later. We're going to try to find some good news to talk about as well, but we're just dealing with what's on our plate right now. It says, this is the New York Times said this. All these developments are signs that the world may have fallen into a new period of disarray. Countries and political groups like Hamas are willing to take big risks rather than fearing that the consequences would be too dire. Everybody's making moves. Do you feel it? Like there's a lot going on. We've talked about that. These things, they happen. Big things happen fast. And we think they're never going to happen because we just kind of cruise along and everything's hunky-dory. We talked about like we were in this period of calm, and then big things happen very fast. And a lot of times, big events will trigger other big events. And there's a lot of people who are very frightened that that could be the situation right now. The simplest explanation is that the world is in the midst of a transition to a new order that experts describe with the world being multipolar. The United States is no longer the dominant power it once was. This is the New York Times, guys. And no replacement has emerged. As a result, political leaders in many places feel emboldened to assert their own interest, believing that the benefits of aggressive action may outweigh the costs. These leaders believe, that they may have more sway over their own region than the United States does. So basically, the New York Times just told us that the period of United States world dominance is over. And that people throughout the world, political parties throughout the world, politicians, leaders throughout the world are emboldened now to make big moves. Are we seeing that in Europe, in Ukraine? Are we seeing that in Israel with Hamas and the Palestine situation? Are we going to soon see it with Taiwan and China? Where else? North Korea. We are in a period of change like no other. Now, when we circle back to our insurance policy, what do we hold, right? What do we hold that's worked for thousands of years? I know we've talked about it many times. Silver and gold have worked for thousands of years. They have. That's just the reality of the way the world works. Silver and gold have seen periods like this, intense conflict, fast change, right? The world, I was reading this last night, the world has become very complicated. The systems have become very sensitive, so things can break quickly. Things can change quickly. I would buckle in. One of the world's leaders, I forgot his name, but nonetheless, analysts said the next 12 months are going to be a period of change like we can't even imagine. Now, nobody has a crystal ball. He doesn't necessarily know that for sure, but looking at everything going on, do you want to, and this period of change could make fast, major changes to things like the dollar as well. We hear a lot of people talk about the dollar, like, oh, it's going to take decades. It's going to take, 20 years, 10 years for this de-dollarization to occur, what the BRICS are talking about. Well, if major events unfold, we could see big moves very quickly. And if the dollar suffers, right, a big sell-off type period, you know what that's going to mean for people that are holding silver and gold, right? Silver and gold are going to hold their real value, where the dollar could, and I don't want it to happen, all right? We're not cheering for it. I live here in the United States, but the situation in the world has become so complicated. Just what's going on right now in Israel with Hamas. If you try to analyze, this is not happening in a vacuum over there. It's not a matter of hero and villain. There's two sides to every story, and it's a very complicated situation. And I'm not going to purport to you that I completely understand it, but I understand enough to know that it's not just a hero-villain type situation. There's two sides to the story, and there's alliances. You have Iran working with Palestine. You have the Saudi Arabians involved in a certain way. Some people are even saying China, and there's three-way relationships. It's extremely complicated and involves many more players than just Hamas and Israel. Is the United States involved? Of course, the United States is involved. So I'm not going to sit here and give you a long-winded analysis of the political situation there. What I will tell you is it feels like, to me, that it could be a powder keg type situation. What's already happened is horrible. And we've talked about this yesterday, and we'll talk about it every day, whether we're talking about Ukraine or we're talking about Israel and Palestine. We don't like war. It's really a pointless endeavor, and it's sad on many different levels, but we've got to keep our head out of the sand. We can't ignore that the world right now is probably in the most precarious situation that a lot of us have seen. What's your insurance policy? What's your safety valve? Right? I mean, cash, stock market, maybe real estate, maybe farmland. I don't know. Maybe, I think farmland, real assets, but real assets, real things that have held their value again for thousands of years, that have seen everything that has occurred, I believe to be a very, very good move. But we've got two big factors now that can support, right, as we move into the next 10 days, the next 10 months, heck, the next 10 years. We have a world, geopolitical world, that is creating a safe haven bid for the precious metals, for silver and for gold. But here in the United States, the world's biggest economy, still, we have factors that are supportive for the metals as well, because, guys, things are not looking good here in the United States. Hey, we got 100 thumbs up. Thank you. Thank you for the thumbs up. Thank you for the super chats. Thank you for subscribing. And I got to ring the bell 10 times for you. Give me a second. There we go. 10 ring-a-ling-ding-a-lings. So let's talk about what's going on in the United States. And I'll be honest with you, there's almost too much. We could be on this video, on this live stream for hours upon hours. So I'm going to do it in a concise way, just to tell you a few of the things going on that indicate things are not good, healthy in the United States economy. Here's a headline. Market from Business Insider. Rising corporate bankruptcies and debt defaults are another headwind to the economy. Experts warn. The experts are telling us this. A wave of corporate bankruptcies, a wave of corporate bankruptcies and debt defaults could rock the economy. Charles Schwab expects bankruptcies and defaults to peak at some point over the next 2 quarters. And we've talked about this, guys. The rise in interest rates, the most violent rise in interest rates almost in the history of the country. It takes time for that to bleed. It's got a lag effect to bleed through to the economy. All these zombie companies, and there are tens of thousands of them out there that were living off zero interest rates, are now being forced, are being called to reckon with higher rates. They have to refinance their debt they took out 4 years ago that maybe they were paying 4% interest on. Now the bank's saying, hey, you want to refinance that debt? Sure, we can do that for you. You're going to need to give us a couple $100,000 as collateral, and your new rate is 10%. So we've got a wave of bankruptcies. A spike in bankruptcies among U.S. companies could help push the economy into a recession. Let's move on, because there is so much more. Here we go. This is from CNBC. Inflation. Want the good news? You want some good news? Well, I'll give you some good news. Inflation is, quote, always going to be a risk with the U.S. economy that has now been fundamentally changed. That comes from ADP's chief economist. Key points. ADP's monthly report on Wednesday showed that private payrolls rose by just 89,000, well below the Dow Jones consensus of 106. Okay, whatever. Though the jobs report had been traditionally viewed as a lagging indicator, this chief economist noted that the relationship between the labor market and monetary policy has been overhauled in the course of the current cycle. Okay? Inflation is always going to be a risk in the U.S. due to structural changes in the labor market, according to Neela Richardson, the chief economist at ADP. And ADP is that massive payroll processing company, almost an arm of the government. They process payroll for millions and millions and tens of millions of people. So they have access to real data, okay? Inflation spiraled out of control. The U.S. economy has been fun. Think about this. Do you feel like the U.S. economy has been fundamentally changed? I believe it has. I don't know why they did what they did during the C-19 pandemic, where they decided to print 40% of dollars that had ever been created, but it totally blew everything up, okay? It might have been a good party while it lasted, right? It'd be like you coming home to your wife or husband and saying, hey, I just got this new credit card. It's got a $15,000 limit. Let's go blow it. Let's live it up for the next 3 months. Sure, it's great, but then there's a hangover, and we got the hangover right now. Has the U.S. economy been fundamentally changed? Yes, absolutely, right? And now that we have an untenable level of debt, go to the U.S. debt clock and watch for 1 minute as the level of U.S. debt continues to grow and grow, approaching $34 trillion. Has the U.S. economy been fundamentally changed? You know it has, right? Compare that debt level to what the country had 10 years ago or 20 years ago. We have been fundamentally changed, and there's a double whammy effect now with all that debt, with the fact that we have interest rates. Interest rates are no longer at 0%, and nobody wants to buy that debt. I got news for you. All these countries, remember what we talked about earlier, the world political structure changing, geopolitical structure changing. Japan wants to sell their treasuries. Saudi Arabia wants to sell their treasuries. China wants to sell their treasuries. All that's making rates go higher and higher. And at the same time, all those dollars coming back to the United States result in just one thing: the potential for runaway. May I say, we don't hear that word much anymore. Hyperinflation? Oh, remember that? Nobody talks about that anymore, right? And on top of that, we have the other structural conflicts going on in the world. It is just becoming a very, very, very difficult environment for us to navigate in terms of preserving our wealth. And what do? We'll say it again, right? A lot of us, to one degree or another, rely on precious metals to help us protect ourselves, insurance policy, and a little added bonus, possibly provide some wealth creation, wealth generation. We got a lot more, guys, a lot more. I'm going to put you on mute while I take a quick drink. Thank you. Let's move on, because it gets even better. This is crazy. Do you own a house? Do you live in a house? Do you live in an apartment? Do you have kids that might need to buy a house someday? Thank you for that super chat. I'm trying to see who it is. I'm sorry. My eyes. Hold on here. I want to say thank you for the super chat. And then I have something that if you need a place to lay your head down and sleep every night, or do your kids, do your grandkids, or potential, I don't have grandkids, but my potential grandkids, absolutely. And this is absolute. Sorcerer Stan, thank you, my friend. I appreciate that. I will have a coffee. What the heck? I'll have a little drink right now. Because if you're concerned about where you or your children or grandchildren may lay your head, we all need shelter. It's one of our absolute primary needs in life. And I'm looking here, I'm getting readouts, right? The markets are still down. The NASDAQ's almost down 1%. But we're not talking about the NASDAQ. We're talking about housing in this country. You're going to tell me that we have a healthy housing market in this country? Right? Part of what we do is provide housing for ourselves, and real estate is such a critical component of the economy. Listen to this. The U.S. housing market is so expensive that incomes would have to spike by 55% for it to be considered affordable. Industry executive says, here's the keys. The housing market is so unaffordable that only 3 extreme scenarios would return it to pre-pandemic affordability. And it wasn't that affordable back then. U.S. incomes would have to spike 55% to consider the current market affordable. An industry executive said other scenarios would have to see home prices crash by 35% or mortgage rates drop by 4 percentage points. Let's unpack that right there, okay? Incomes would have to spike by 55%. That would be massive inflation. There's a term for it, not cost push, but labor or something inflation. Okay, so that's super inflationary. Is that good for silver and gold? I think you can answer that question, okay? The other scenario would have to see home prices crash by 35%. Okay, they're not going to let that happen. That's as likely as them letting the market crash by 35%. The system is too fragile and too delicate to handle any real medicine. Is that what we need? Absolutely. What this country needs to do is let the housing market crash a little bit, let the stock market crash a little bit. That's called capitalism, because we're living in la-la land right now when it comes to home prices. I was talking to one of my neighbors over the weekend, and she told me, she's like, I think our house is worth $500,000. And I thought, well, maybe, but that just seems a little absurd to me. And the reality is maybe they could sell their house right now for $500,000. But we have to look at future, how do I say this, nominal versus real value going into the future. If my house is worth $500,000 right now, which I think is overpriced, and it still is 2 or 3 years from now, I have a real feeling the only reason it's still going to be worth that much in fiat money, right, numbers nominally, is because we've had massive inflation. And massive inflation is good for the silver and gold price. Don't forget, stagflation, right? Deflation is inflation, and stagflation is the most fertile absolute scenario for the precious metals. The other option is that we could have mortgage rates drop by 4%. Yes, that would make houses more affordable because people would have lower rates. That would also cause another round of mass inflation, which would be good for I can't imagine a scenario right now in this world that is not positive for the metals. Don't make any financial decisions based upon anything that I'm saying. I'm just sharing my opinion with you. But as I look at it, as any of these scenarios, things have gotten so screwed up right now in this world that there's very few scenarios outside of like really scary stuff like nuclear war and those types of things, which is just bad in general, bad for all of us. Here's something. If you thought about this, something most people haven't thought about when it comes to mortgage rates, and then we're going to move on from this mortgage rate discussion, but people don't think about this. People say, oh, I got a 30-year mortgage at 2.5%, and that's great. I'd say hold on to that. But now new people that are wanting to buy a house are getting 30-year mortgage rates that are more like you hear these numbers, 7.89%, 30-year mortgage, right? And when you do the math, people are paying 3 and 4 times as much now for the same house that they would have paid just like 5 years ago. It's insane how much monthly payments have gone up because of those rates. But there's more. Yeah, there's more. There's a kicker. Those rates you always hear people talk about, those are for people with like excellent credit, with 800 credit scores. People that have average credit, like the average credit rating in this country, I hear is like 650 or something along those lines. Their mortgage rates are significantly even higher. Could you imagine mortgage rates at 10%, 9%? Because your credit's not good. So you got to pay more than the guy or the woman or the couple that has good credit. Housing is out of control, and either way, it's going to be painful how it corrects. However, either way is also very, very supportive for we got more, don't worry, but wait, there's more. And thank you for the super chats. The support is much appreciated. I don't do memberships. I don't do Patreon, which I'm not putting anybody down that does. I don't have a class that I'm trying to sell you. I do have sponsors, and I do accept super chats. That's the way that people who want to, never expected, always appreciated, can support us. Our sponsor, Pimbex. If you're looking for online bullion dealer who you can trust, check out Pimbex. Do your own due diligence. You guys are the ones who told me about Pimbex to begin with. I did my homework. I felt comfortable. I felt I could trust them as a quality bullion dealer with the lowest prices. And so far, I've been proven absolutely correct. If you want to get some silver, you want to get some gold or platinum, check out Pimbex, Pimbex, Pimbex.com. Okay. What else? It gets better. It gets better. Here, let's just talk about America. This is from AOL. Remember AOL.com? I'm bringing you the Wall Street Journal. No, AOL.com. America Online. Remember, it would make that noise and then connect? Okay. America is now paying more in interest. We're paying more on interest, our government, on its record $33 trillion debt than on national defense. We have $34 trillion in debt, and we have higher interest rates. The party's over, folks. The party's over. We're paying more in interest expense than we are on national defense. Oh, and by the way, it's not getting better, Joe. No, it's not working. Because the level of debt is going up, and the interest rate on the debt is going up. Can you see it? Is it going off your screen? Up. That makes the interest expense that already exceeds the level that we're paying for national defense go up even higher. Do you ever start to feel sorry for your kids and grandkids? Because they're going to have to, sorry, I hit you there. Sorry. They're going to have to deal with this mess, right, that we created. I know. I'm not blaming you. I'm not blaming me, right? But we, our leaders, have created a huge mess that our children and grandchildren are going to be paying for generations. Even one of the senators said that, right? We're in a death spiral in this country. America's gross national debt hit an eye-watering. Are your eyes watering? $33 trillion for the first time in September? Ooh, it's so high, my voice is high. Mere months after eclipsing $32 trillion. It only took a couple months to add a whole trillion to it. The U.S. is also currently spending more on interest on the national debt than it does on national defense, according to the Treasury's monthly statement. Then the next article's, let's move on. There's more. Real estate asking prices plummet as mortgage rates hit 20-year high. Is it time to buy, sell, or stay put? I'd say stay put, okay? Asking prices in real estate are coming down. Redfin, which is like the nation's biggest real estate company, right? Their CEO issues a dire warning on U.S.'s rock bottom real estate market. He says the American dream is in trouble. Look, I don't want to be a cynic. You don't want to be a cynic. We don't want to be negative. We don't want to wear tinfoil hats or anything along those lines, but we want to know what's going on. This is the CEO of Redfin, which has some special designation like the world's biggest online real estate something or another. Anyway, his name's Glenn Kelman. He reacted to the U.S. real estate market, warning homebuyers that relief from the rock bottom economic conditions remains unclear for 2024. He says you'll have to ask the Fed when the market's going to get better. See, they're going to blame it on the Fed, right? These real estate companies that I mean, it's been a good run for realtors and real estate people over the last, 25 years? We're getting back to more real environment, like a real type market. And my heart goes out to them. I know it's difficult, but, I think they're all waiting. I'm hearing this. They all think that, next year we're going to go back to these low rates and everything will be party again. I'll be surprised if that's the case, but we'll see how it plays out next year. He says, so the only real question is whether we're going to catch a break entering the home buying season of 2024. He says, but I think most people have written off the 2023 home buying season. Boy, everywhere we look here in the U.S., Jeremy Grantham says we're going to have a 50% crash in the S&P 500. You know who Jeremy Grantham is? Yes, Jeremy Grantham. I got to ring the cowbell. Thank you, Susie. Thank you, Coin Shop Chris. I'm sorry, we have 200 thumbs up. It's cowbell time. Hold your ears. Yes, this is real. Yes, that's a real cowbell. Okay. Jeremy Grantham is for real. He manages the massive asset management firm that has like 60 billion under management. Jeremy Grantham is highly respected out there. He's calling for a 50% correction in the S&P 500. I don't think that's going to happen. But when somebody of his stature, right, and his insight and ability says that, we better perk up and listen. And we've talked about this in terms of looking at all that through the lens of silver and gold and platinum. I'm to the point now where things are so screwed up. No matter what, no matter how this plays out, we're going to see support for the precious metals. Okay. Interesting from Marin Katusa. I may have showed this to you the other day, but we want to recognize something about gold. Gold is at a decade low RSI reading. RSI stands for Relative Strength Index. It's one of the most used and most followed technical chart patterns. Excuse me. I was dying there for a second. And we have a decade low for the relative strength index in gold. Now, you know, as gold goes, so goes silver, so goes platinum, right? If you look at that chart that I just showed you, it goes up and down, up and down, up and down. It's due to go up, by almost any reasonable metric. The silver price, the gold price, whether no matter how you want to compare it to the S&P 500, you want to compare the price of gold and silver to the gold mine, all the metrics are crazy insane, pointing towards big value right now in the metals. All right. Think about the dollar. Okay. I'm going to pull it out. I can't help it. I got to pull out the old dollar chart one more time. Everybody says, oh, the dollar. I didn't look this morning. Is the dollar up? Now, we may be in a very unique situation right now where the DXY dollar index is up. And honestly, I didn't get a chance to look at it this morning. And gold goes up because when gold gets its safe haven bid, so does the dollar. But the big reason everybody's telling you and me why silver and gold are down is because the dollar's so strong. Look, that is what, 35 years worth of the dollar. You see the black parts that are colored in? That's the amount of time that the dollar has been above 100, the DXY index, which it is right now, probably 107, 106, 108. But it's important to note that that's only like 7 or 8 years out of the last almost 40 years. Okay, so very, very small amount of time that the dollar, even when measured by the DXY index, which is, that's like comparing a bunch of turds in a toilet. There, I said it. That's as nasty as I get, but that's the reality, okay? And people say the dollar's strong. Well, you've heard this 8 times from me. Yeah, the dollar's great. Go back 15 years to 2008. The DXY was at 80. The DXY today is at 108. It's up 30% in the last 15 years. The dollar's up. It's 30% more valuable, according to this popular measure that everybody uses, the DXY, to explain why there's been downward pressure on silver and gold. Well, if the dollar has been up so much in the last 15 years, why does it only buy half as much of the goods and services today that it did back then? I'll tell you why. Because in real terms, not the turds in the toilet, but in real terms, what you can do with your dollar, it's down in value. And that's only going to continue because compared to 15 years ago, we've got significant higher levels of debt in this country. We have a whole different world that we're living in, okay? Completely different. Remember what the New York Times said? The world is changing like never before in your life. Wake up, Mortimer! Wake up! It's wakey, wakey, okay? Wakey, wakey, go make some cinnamon rolls and bakey, however you want to say it. It's going on right now. Very likely. Maybe I'm wrong. Maybe everything's okay. Maybe the world is not really, I guess maybe if we watch the children's news network, CNN, they'll tell us what they want you to think and know. But if you pull your head out of the CNN cesspool and look around what's going on in this world really and try to read some objective news sources, I'm not saying I know everything going on. Because I don't. I absolutely don't. I can barely understand what's going on with Hamas and Palestine and Israel, but I know enough to know that there's major change afoot in this world right now. I would argue that there's right now in my 53 years, walking around on this beautiful planet, I've never seen such a screwy situation like we're seeing now. And do we want to be prepared? Yeah, of course we want to be prepared. Let's touch on one more thing regarding the United States of America and what a fine position that our politicians have gotten us into. Before I do that, I want to thank our other sponsor, First Mining Gold, firstmininggold.com. Go there and learn about this company. If you want value, do you like to hold gold? Do you like to hold silver? Would you like to own some gold and silver, but it's still in the ground, but it's in Canada and it's been drilled and defined, and they're even exploring for more because First Mining Gold has 2 5 million ounce projects, one in Quebec, one in Ontario. The one in Quebec is crazy interesting right now. They just put out a preliminary economic assessment that shows 200,000 ounces a year. It's like a business plan for what could happen. So check them out. Thank you, Mike. Thank you for that super chat, my friend. Very much appreciated. First Mining Gold and Pimbex, for that matter, make this show possible. So do me a favor. Just check them out. Look, I'm not giving financial advice. I'm just giving you my opinion. Stocks are risky. Heck, isn't everything risky after all? But, see what you learn and see what you like. Now, let's get into, I got to read this. This is mind-numbing. Are you ready for your mind to get numbed? If you've been listening to me for a few minutes, you probably are, but I'm going to numb it even more. This is from the Business Insider. The collapse in treasury bonds. Remember, treasury bonds are the safest investment in the world. Don't believe anything they tell you. If you want the truth, or at least 3/4 of it, right? The truth comes from the most unlikely places, like some guy in his basement. But remember, haven't they always told you treasury bonds are the safest investment backed by the United States? You can't go wrong with a treasury bond, or can you? Because the collapse. I didn't write this. Don't get mad at me. In treasury bonds now ranks among the worst market crashes in history. Worst market crashes in history. Let's dig into this one a little bit. Since March of 2020, so what is that? 2.5 years ago? Treasury bonds with maturities of 10 years or more. Okay, that means treasury bonds. Thank you for that super chat. Oh, man. I'll come back. So, metals to the moon. Yes, precious metals to the moon. Thank you, my friend. That is awesome. That is Mauricio Ruiz. Thank you, Mauricio. Appreciate the support. Very much appreciated. Since March of 2020, 2.5 years ago, guys, we're not talking about 20 years ago or 10 years ago, 2.5 years ago. Treasury bonds with maturities of 10 years or more have plummeted 46%. Let me make this very clear for you. You took $100,000. Imagine right now you got a stack of honeys, $100,000. Last night, my daughter Lillian she had two $50 bills. She's a very smart little girl. She was with Grandma and Grandpa, and they bought an expensive sweatsuit for my other daughter, the diva, and Lily, and she's smart too, but Lily, the smart little one, they gave her $100 compensation and gave her two $50 bills, and she was obsessed. I'm watching Little House on the Prairie like we usually do on Sunday nights. I love that show. And she's like, Daddy, will you get me a $100 bill to trade for two 50s? And I'm like, yeah, I'll do it tomorrow morning. Well, she was not going to have that. So Daddy had to go dig out my only $100 bill, okay, and trade it in for two 50s. Anyway, why? 100,000. You got $100,000. Let me show you how much pain you're in. Thank you, Cliff, for the super chat, my friend. You're a good man. Appreciate it. You got $100,000. All right. Maybe Uncle Dale died and left you $100,000 cash. You got $100,000. So you're like, I got to do something with this. It's March of 2020, just before the what's it called? The cough hit. My friend Coin Shop Chris calls it that. You got $100,000. What are you going to do with it? Come on. Oh, you're going to go down to your local financial services representative. And you go and you sit down and they say, hey, they're your best friend, right? You can give him $100,000. Like, wow. But you tell him, like, I want to be safe with this. And he says to you, we're going to buy the safest investment on planet Earth. We'll buy you a 20-year U.S. Treasury bond. It's paying 1.4%. And so, since inflation's not a problem, just listen to what Janet Yellen and Jerome Powell are telling you. They say, don't worry about inflation. That little uptick we're having, this is 2020, that's just transitory. That's just temporary. It's not a problem. Don't you worry about it. You're going to buy a 20-year Treasury bond with your $100,000. It's going to pay 1.4%. You're like, woohoo! I'm going to make $1,400 a year, almost over $100 a month on my bond. Okay, so you get your bond, you get your paperwork, and you're happy. You go home, and you wake up today, and you're like, you know what? I need some money. I gotta fix my, my RV or whatever. Right? It's going to cost $20,000. So you're like, I'll just cash out that bond, that safest investment on the face of the earth that I bought back in March of 2020. That I gave that financial services guy who was my best friend, but then never followed up. Anyway, you go down to see him. Remember me? Oh, yeah. I want to cash out my bond. Your bond now, if you want to cash it early, now if you want to wait till the end of the 20 years, yeah, sure, you'll get your $1,400 a year and you'll get your whatever $100,000 will be worth in 20 years, right? But if you want to cash it out now, it's plummeted in value by darn near 50%. Welcome to the real world. Don't forget, guys, have you considered this? Right? Bonds have crashed. Why is that not headline news? I wonder, right? Does that make any sense? The banks hold all those bonds as well. You know that whole story. But the banks are fine. They got FDIC insurance. So they're fine. Don't worry about the banks. They got some commercial real estate loans that are going bad too, but don't worry about the banks. Jerome said himself. Jerome Powell tell you, don't worry about the banks. We got it all covered. We got everything covered because we have a printing press. We can print all we want. Okay? Man, thank you for the support. All right. Go, Ron. You're very informative now, unbiased, not brainwashed. I try to be as objective as possible. When it comes to the situation, let me get done with this. See, Susie's watching. She wants me to stay on track. I'm staying on track. When it comes to these bonds and the losses, it's catastrophic. right now, what's going on with bonds. It's a crash that measures up against any crash, including the tech bubble crash that occurred, okay? But it almost feels like it's being hidden. It says the bond market sell-off that's sending yields soaring is starting to eclipse some of the most extreme market meltdowns in past eras. Bloomberg reported on Treasury bonds with maturities of 10 years or more had notched a 40% loss since March of 2020, while 30-year bonds had plunged by over 53%. These losses, I'm going to read one more thing to you, are nearly in line with stock market losses seen during the worst crashes of recent history, when equities slumped 49% after the dot-com bubble burst and 57% in the aftermath of 2008. The bond market has crashed, but there's more. Yeah, there's a kicker. There's usually a kicker, and on this one, there is a kicker. Did you know that the bond market is almost 3 times the size of the stock market? Hey, 2 times, 3 times. Anyway, the bond market is way bigger than the stock market. And isn't it interesting that we never really hear, it doesn't get the attention that it deserves, but it has absolutely crashed, okay? The last gentleman who gave me the nice super chat brought up, there's a war going on with Palestine and Israel. I'll say this about it. I recognize there's 2 sides to every story, okay? It's not just a hero and a villain type situation. And that's a long-standing conflict in that area. But number one, I wish the world could figure out a way to get along just a little better instead of blowing each other and all of our stuff up. Right? Number one, we could stop blowing everything up. Number two, think about this. All those people that spend all that time on defense technology, different creative ways to destroy things, could spend their time and energy on productive things to help mankind. I mean, the whole world could be a much better place. I'm sorry. I know it's not necessarily a popular and with the reality of the world right now that we live in, it's not happening, but it could happen. I heard somebody say, maybe it was Stu, that you would think, like, we consider ourselves to be like the dominant and the smartest species on the earth. You'd think we might learn that we're better off when we work together and compromise and cooperate as opposed to fighting. Right? I mean, even at your own house, I know here at the house, like, I think Susie and I seem to do a lot better when we're cooperating, and we do cooperate. And I do appreciate Susie and everything she does to help the channel. You guys were very nice to her. Please continue to say thank you to Susie. Thank you for the super chats. Thank you to Jake's Custom Parts. Thank you to Coin Shop Chris. Thank you to Annie Oakley. Jim McDaniel's here, our newest moderator as well. Thank you, Jim. If I missed anybody, I do apologize. It's going to be an interesting. We got to realize right now. Oh, we got to get to 300 thumbs up, man, because we got to pull this together. The key takeaway, right, is we look at the world through the lens of precious metals. Okay. As we look at the world through silver and gold for safety, for security, what's going on will start big in the world. It is crazy. The New York Times is talking about it. My Lord. The New York Times is basically saying the world is changed like nothing. Even 10 years ago, 5 years ago, we couldn't have imagined what's going on right now. But unfortunately, it's even scarier when we factor in what's going on internally in the United States. The level of conflict in this country, right, politically, socially, everything else, the economic, the monetary situation, the fiscal situation, right, what the Fed is doing, what the government is doing with your money, it's all out of control. Now, don't forget, right? The takeaway here is silver and gold have seen this before. This happened in the Roman Empire. This happened in Greece. This happened in Germany. This happened in Venezuela. This really, right? It feels like it's never happened before because it's our first time experiencing it. But periods of massive change, periods of currencies losing their dominance in the world have occurred. Is it going to happen this month? I don't know. Is it going to happen this year? Next year? I don't know. Is it going to happen in the next 10 years? We don't know for sure. But we can look at the big trends that are occurring and position ourselves for safety. I got to ring the bell with my nose. We got 300 thumbs up. Thank you, guys. I'll be right back. Hold on here. I always say it's the last time I'm going to do this. Yes, I'm the only YouTube content creator that when we get the 300 basement dwellers, I haven't said that today, my friends, my basement dwellers, for you anything. Do you want me to ring this bell with my nose? Huh? I think overall you do. So I'm going to go ahead and do it because that's what we do here in the basement. When we get to 400 thumbs up, we ring the gong. Woo! That is painful. Thank you guys for being here. Okay, we'll be back tomorrow. Basement dwellers, stay united, right? There's so much craziness in the world right now. We'll navigate these choppy waters together. We'll be okay, right? We've got YouTube. It's your channel. It's your basement as much as mine. We'll be back tomorrow. Hey, Coin Shop Chris and I put out a video over the weekend. Go check it out. We talked about what's going on at the coin shops right now, what they're experiencing, and how interesting situations are developing in the retail and individual investor silver market in particular. We also show how you can save yourself $200 buying some silver. So you might want to check it out. Take care. I'll see you tomorrow. Bye-bye.